What year did you start with Coots?
So I started when I was 18.
Okay.
So I was born in 67, so 85.
85.
Yeah.
And you moved to Singapore with Barings in 90? No.
I'd say I went to Indonesia in 90.
Okay.
I went to Singapore in 92.
92. Okay.
So I was probably in Indonesia towards the middle of 1990.
Right.
Then went back to the UK for about a 9-10 month period, and then moved on to Singapore.
Okay. And like, just to give people a rough idea of what we're dealing with, around 25 years old, I think you made a 10 million pound bonus, and around 28 years old, you were in prison with Chinese triads.
Yeah, I think some of the I mean that's true. I think the 10 million bonus is a bit of a fallacy. I think my biggest bonus was £500,000.
Okay.
And yeah, but in terms of the chronological order, at the age of 25, I was flying high. At the age of 28, I was starting a 6.5 year prison sentence in Singapore.
Wow. I think people forget how young you were. And I want to talk about some of the lessons in the entire process, because you processed all of that in prison, you wrote the book, and then these days you advise people about risk management. I wanted to just give a little bit of a lens, because I knew a bit about this world.
Yeah.
So I studied engineering at MIT, and I was recruited by Wall Street as one of the rocket scientists to come in and trade the derivatives,
Right.
which is what you were trading out in Singapore. And so in 1993, I went to Bankers Trust at One Liberty Plaza right next to the World Trade Center, and I was given the interest rate swap book, which was a book where I traded a lot of the contracts that were traded in Chicago Mercantile Exchange in Singapore. I chiefly traded Eurodollar futures. You were trading more stock index futures, I think.
Yeah, Nikkei 225.
Yeah, Nikkei. So that was a very deep, volatile, that was a big instrument.
Yeah.
And so maybe to start off, just to give people a bit of an idea, I think a lot of people, when they hear the word derivative, they don't know what it is. It's probably got a bad reputation for good and bad reasons. Do you ever try to explain that word to people, what derivatives are?
I certainly don't think that they're as complex as I think the word derivatives gives out the idea that it's very complex and difficult to understand. It certainly wasn't. I mean, I was trading Nikkei 225 futures, which were 3, 6, or 9 month contracts based on where you thought the future price of the Nikkei 225.
Right, which is
was
a
gonna
basket
be.
of 225
Yeah.
Japanese companies.
Yeah, 225
Right.
Japanese.
So
stocks.
at one, and what would it trade at roughly back then as a number? Do you remember?
Well, it went up to as high as 39,900.
Okay.
I think that was just before I arrived in Singapore. By the time I left Singapore, it's trading at 18,000.
Okay.
So that gives you an idea of the volatility. It's
Right.
lost over 50% of its value in that 3 year period. And
Okay.
I don't think Japan as a country has ever really recovered from that particular
Probably
period.
not. And so for people understanding, you could go out and say buy 225 companies in Japan and try to buy and sell those, or you could buy an index that tracks those stock prices, and all of those things say add up to 39,000, and then you can just use that as a number. And if you think the Japanese economy is going to do well, or the company's going to go up in value, you buy it.
Yeah.
If you think they're going to go down in value, you sell it. And then Nick was trading a future where it would settle 3 months, 6 months, 9 months from now. So where do you think the Nikkei index will be in 9 months?
Exactly.
So like you said, actually derivatives can mean a lot of different things. I think it really means something that's derived from the price of something else.
Correct.
But actually most of them are quite simple. Some of them, like the stuff I was trading at Bankers Trust, could get very complex.
Yeah.
But the stuff you see traded on futures exchanges are actually quite simple.
Very simple. Very simple.
Right.
So,
That being said, they were the newest novelist instruments of the time, and the compliance departments were always, and maybe will always be, behind some of those things, because these traditional institutions were used to maybe some government bonds or some stocks, and otherwise they didn't really know how to necessarily value those or track the risk of those things.
yeah, I think up until that stage, everything was quite vanilla, quite ordinary. So people were quite okay with what was going on in the equity market. But now you're in a situation where you could put up a small amount of the overall value of the index and trade it quite, there was a lot of speculation in those particular markets. So You know, when it came to audit and compliance and risk management, it was the new kid on the block. There was a premium paid for people who worked in that area, as much as there was a premium paid for the people who worked in settlements of derivatives as well, because, you know, it was something slightly different, and there were a smaller number of people that were experienced in it, and that's why the premium got paid.
Yeah, and I experienced the same thing at Bankers Trust. So I was on a desk with about 20 guys, and a lot of our books were still being run on Excel spreadsheets that we would run overnight by ticking, a basis point change of every single, interest rate, derivative instrument, and then it would price it. And if it crashed overnight, you wouldn't have a P&L, you wouldn't have anything. And it also meant that, compliance didn't always have the best handle on what was going on, although they were paid better than most because they were the smarter ones.
Yeah.
And we were probably paid better than most as well because we were potentially making lots of money. But there was also a little bit of a disconnect from someone really watching over you. And I remember compliance coming over and saying, where do you want to mark your trades this month? And I would be like, mark them here. And they'd be like, okay. And they would leave. And that was my P&L that I would get paid on, and I was deciding what it was worth.
Yeah, I think if you look at it from the other perspective, it wasn't difficult to confuse them.
Right, correct.
So if you throw a couple of words in that they don't really understand, they'll nod their head and say, everything's okay.
And I know you can be a pretty charming guy, and so I think all traders have had that talk with their compliance, where they throw a few words out there. They act a little busy. They say, this is this. Don't you know how this trades? And then they go away. You're paid more than them, and you're not their boss, but there is some intimidation that can go on. At least it used to go on back in the day.
Yeah, the more confident or the more sure of your answer, the more likely they are to believe you. And that still goes on to this day. I was at an audit conference a few weeks ago, and it was exactly the same thing. From an audit perspective, what they're trying to look out for is somebody who's too confident about their answers, because the belief is that they're trying to divert you away from what you're very correct in terms of your answers and very sure of them, and for that reason there's an inclination to believe what you're being told. And that was a lot of what went on during that period.